What's up, guys? Welcome back to the channel. Now, guys, we are doing a giveaway for $1,000. All you got to do is sub to the channel, and we do have a Discord with 2,500 people. We are a family. If you want to come in and be a part of the family, the link is in the description or in the comments of the video. Now, today I'm going to go over options and how to understand options, because I know it's kind of confusing out there, but I'm going to show you why charting and options are probably your best thing. So if you are in options, this is the channel for you. But let's go over it and let's get into it. Alright, guys, welcome back to the channel. Now we are going to go over options and talk about a little bit about charts also, and what's upcoming on this Monday and what to expect. And to the people who are like, oh, the market didn't drop, I'm going to show you what and how to understand charts, because apparently a lot of people don't. If they're going to comment on my video and say the market's going up, guys, the market's not going up yet. The market is rotating in tech. Now let me show you. So this upcoming week, what you need to pay attention about is the rotation, like tech companies like Apple hasn't dropped yet. Now what's going to happen is when Apple drops, you're going to see the other companies that did drop already, like Meta already dropped. So since Meta dropped, what's probably going to happen is you'll see Meta go up, and then you'll see Apple go down, and then the triple Qs are going to stay the same at around 390. And that's where options come into play too. So let me show you how to understand that. So here, let me actually take these out. So okay, so in options, right now, a lot of people are like, the biggest question I get asked is, what do I do about strike price? So strike price, right? So let's go over strike price. So strike price is something that charting gives you when you're doing strike price. So when you're doing like price action, it is very hard to understand what strike price to pick. But when you're doing charts, it's very easy to pick the strike price. So like, say, not financial advice on the whole entire video, but like, say if I'm going to do Apple puts and calls, right? So right now, what you would want to do is never trade in between the channel. That's the biggest mistake about traders, okay? So what you want to do in options is you want to wait for that perfect play. You don't want to play every day. That's the biggest mistake that traders do. Now, when you're picking a strike price, say if I want to buy puts. So I bought puts on Friday, not financial advice on this complete video, but what I did was I looked at the chart at Apple. But you have to remember, on Apple, on actually all of the tech companies, you're going to have multiple charts, okay? So don't worry about this channel right here. This is just an old channel. But the two channels that you want to look at is the day channel, this big channel, and then the small channel, this channel right here. So let's zoom in this channel right here. So we'll go into this channel. So what you want to do is you want to look at Apple, and right now, this would be the perfect time to buy puts. Why? Because you're at resistance. Now, when you're buying calls, you want to wait for support. That you never want to like buy calls in between here, because what happens is if you try to play in the middle, say, oh man, I missed the top or I missed the bottom, but I'll get back in, and even though it's halfway in the channel, I'll just wait. What the biggest problem is, you can trade sideways when you're in the halfway of the channel, and that's where it becomes very toxic and the decay will hit you. So what you want to do is you want to wait for that perfect time. So this Friday, I actually bought puts in Apple. Now, the biggest advice that I give you, that I can give you about buying in time frame, the time frame of buying puts and calls, the best thing to do is always buy a month and a half out. The reason why is because the decay has hit them just enough to lower them to a reasonable amount. So like Apple's puts right now. So if you buy like Apple puts, on, like 4 months out, right? Those puts are going to be like $3-4. But if you go like a month and a half or a month and a quarter out, those puts or those calls will drop down to like $1.50 or something like that. Now, if you're like 2 weeks out, that's where the problem because that $1.50 put or call has probably dropped down to 50 cents. But that gives you enough opportunity to break even if it comes down to that time frame. The reason why is because 50 cents can go to $1.50. That's easy. But if you buy $4, calls or puts, that 50 cents, because you waited a month and a half, the decay hit them, and that 50 cents is not going to $4, and you're going to take a huge hit. So always buy a month and a half out, or a month and a quarter out, like a month and a week or something like that. Now, the best thing I like to do is I call it rotation in the calls and puts. Okay. So in rotation, the best thing to do is, like, say if you have, like you bought a month and a quarter out in calls or puts, right? And then nothing goes your way. Say like like in the triple Qs, like in the triple Qs, we've been trading at a top like this. So we went from November 14th to December 4th. So that's like 2.5 weeks already off your calls and puts. Now, the biggest advice I can give you is the best thing to do is pretty much rotate your calls and puts every 2 weeks. So say like you buy a week and a half out, and then you only have like 3 weeks left. Go ahead and sell those calls and puts and buy a fresh month and a half out. The decay probably hits you like 10%. So it's not that bad of a loss because you can make it up. But if you rotate those calls and puts every 2 weeks, if you're still waiting for a drop or a rally, then what can happen is your calls can stay alive and the decay, won't hit you. Because if you're a week away from your prediction on your strike price, if you're too far away, like say if you bought calls and puts at like 170, right? Say if you bought them 3 weeks ago, those calls and puts at 170, they probably lost 50% already just from waiting. So a month and a half, you're going out, and if you have only 3 weeks left, rotate them into another fresh, calls and puts. Now I already went over, what strike price. So if you're, buying calls like on mine, I would probably buy like 190 strike price, or probably like 185 to, be closer to in the money. Now, the thing is, guys, the biggest thing that you have to understand is the indexes are going to, sorry, my door came open. But the biggest thing is indexes are going to, influence your tech companies. Everything moves together, like completely. Everything moves together. And if you want a list, here's my list. So if you're doing calls and puts, you absolutely have to have all of these. You can stop the video, screenshot it. You don't need the 3 bottom ones. Those are just extra. But from Bitcoin up, this is what you have to do. You need all of these. And then when you have all of these bookmarked, you need to chart every single one. Now, I'm not going to go over it because that's another video. If you want to come in the Discord and let me explain it to you or something. And I offer private lessons also in calls and puts, or options, you want to call it that way. If you want to come in the Discord, I offer classes, and you actually can join my membership. It's like $50. That's nothing compared to what you play in options. But if you want to come in, the link is in the description. But to understand charts, that's a different video. But you have to remember, indexes are going to affect your charts. But remember, guys, like, when we are at a drop or a rally, like, so say if like right here, if we're going for a rally, it's going to come as a rotation. It's not all going to happen at once, especially a drop. A drop, like Meta dropped, okay? So Meta dropped, the last 2 days of this week. NVDA dropped, see right here, NVDA dropped. What was another one? Google dropped right here. So those dropped. Now, what's probably going to happen is, when Monday comes, these will probably pump up, or maybe not, but you'll start to see the other tech companies drop because they all work together. Now, when you're doing options, you need to understand this too. So say if you're buying like 170, say if I'm buying like 170 strike price, right? So the thing is, the closer you are in the money, like say if it hasn't dropped, right? So say if like you buy 170 strike price, right? The thing is, the farther so like say this, say if we drop down to here, okay? Say we drop to 185. Down here, the strike price from like 170 to like say 180. those are not going to move as aggressive until this drop gets closer and closer and closer to your strike price. Now, if you buy too far out of the strike price, your gains are not going to pump as much as buying like 180 strike price. That's the downfall of buying too far out in the strike price. But that's what I like to do, is I like to buy on the support, because if we come down to the support, you're going to easy 6, 7, 8 times your contracts. But if you buy like, 180, and they're 4 times the price, you're only going to times, 2 times your contracts. So that's what you need to remember. Don't panic that, say if your friend bought 180 strike price and they're getting more money than you. The thing is, you need to wait for the drop to get to about like 175, 176 until your 170 strike price starts to pump dramatically. But what happens if we say we pumped and we drop past support, right? Do not stay in the money. Do not. If you stay in the money on your strike price, okay, the gains are not going to be as aggressive as buying out of the money. Because what happens is, if you are in the money, you might gain 20%, but the person that bought 160 strike price, they might make 60% in that day. So if you hit in the money, take your gains, run, be happy with it. Don't get money hungry. But that's the biggest mistake I see people do, is they get too antsy and they want to, hold and, I'm going to the moon. Play your charts. That's what you mainly need to do. But the thing is, you need to understand that your indexes or whatever you're playing is affected by the tech companies. So just throwing that out there. And that's another video. If you want to check it out, I'll put it at the end of this video so you can understand how to trade in the market. But if you don't want to watch the video, come in the Discord. I'll explain it. But that's pretty much some of the biggest stuff I talk about. But you need to check this out too. Every index has a certain amount of percentage on what stock is in that index. So like Microsoft is probably in the NAS, it's in the SPY, it's in the triple Qs. But, Microsoft is going to be bigger than Tesla by like double. So make sure you understand that too. So here's some like examples. So like in the triple Qs, you have Microsoft at 12.5%, Apple at 12%, you have Amazon at 6%, NVIDIA at 5%, Google at 3%, Tesla at 3 point something percent, something like that. Now in the NAS, it's going to be different. So let's look at the NAS. Let's look at like the top 10 real quick. So on Microsoft is, did I have it up? I guess it doesn't show, but look, Microsoft is the bigger percentage. Apple is right below it. Amazon, NVIDIA, Tesla, Google, Meta, T-Mobile, Netflix. That's a part of the NAS. Now, if you want to list, just go on Google, type in what is in the indexes, stock wise, and look that up. That's very good information if you're doing calls and puts. Now, but generally on calls and puts, like that's basically what you need to know, as a basic. But we do play a ton of calls and puts in the Discord. So if you want to come in and learn how to do calls and puts, come in. I teach classes on this. It's like $50. You get in my private Discord. You get my phone number. You get my plays on what I'm doing. We're up, I think, 150% off of some meta plays we did. We went on Meta, right? Or it's Meta. So we called Meta's top right here. And I got out early because I wanted to jump on Apple because it's just going to start probably this week. But Meta already dropped. And look, from here to here, we had 150%. But we have a strike price of around 290 on the strike price. So the closer that we get to 290, the faster and faster and the gains get quicker and quicker and quicker. So if you are in the Discord and you still have 290 puts, just remember around 315 is going to be where it gets aggressive. Now, here's another tip. So say if you're buying like Apple puts, right? Or like say right now we're buying Apple puts, not financial advice. Now, what you want to do is remember the day that you buy Apple puts. So on the 5th, okay? So if you buy Apple puts on the 5th, you have to go look at what the triple Qs were at. So like the triple Qs right now is at 389 or 388. So that's going to be your break even price. So like say if we rally and your puts take a hit, if you drop back down to 388 in the triple Qs, most likely your puts are going to break even. Now it's not going to be like perfect on point, but you kind of get the concept. So just remember that. And then also on like the indexes, what you need to pay attention is, say if the indexes drop to their support, right? But Apple hasn't dropped to its support. Say it dropped halfway, right? Say it dropped halfway, but the triple Qs are already at support. That's the thing. If you have an index on support, you need to take your gains. You don't need to get aggressive, because most likely if the index has already hit support, that's going to control Apple. So say if the triple Qs hit supports, hit its support and then it starts to push, that's going to push Apple back up to like, its resistance. And then you're going to lose all your gains completely. So it's a waste of time. So if you're trading options in tech, you need to chart indexes. And that's why I showed you my list before. And then also the other companies are going to affect your stock. So say if Microsoft takes a dive to support, that's going to help Apple dive to its support. So just throwing that out there, that's why it's super important to look at the entire market, because one stock does not move by itself. But I wanted to go over that to show you some things. And, it's just, I know it's hard to understand options, and I know my channel is growing, and I know people have questions. But if you have any more questions, come in the Discord. The link is in the description. But I hope you guys had a great weekend, and don't party too hard, and don't drink